Today we are going to cover the first topic for this week, which is the introduction and also the financial environment. But I have mentioned before during my previous class that I have already touched a bit on what is the operation goal, what is profit maximization, and also what is the differences between accounting, finance, and also economy. Right? Now today we will discuss about the four major objectives that we are going to cover, which are the overview of finance itself, and then goal of corporation, which is the shareholder value maximization, and also agency issue. And also we will discuss a bit on the financial market and also financial institution. And after that we will discuss on the financial instruments, which are the debt financing and also the equity financing. Right? These items, these new words might be new to you, right? But as we progress through the class, in the semester, you will be able to understand. And also, if you subscribe to my e-group, then you will be able to pose questions if anything or any terminology that you didn't understand. Right? Now, our learning objective for today is that after we have finished for these 2 hours, we will be able to define what is finance. Okay, what is finance, and identify the financial managers' key activities. What are their functions? What are their rules? What are their job of duties? Right now, and then after that, we will also be able to explain the wealth maximization goal, right, of the corporation, and what is the task of the financial managers in order to achieve the goal, right? And then we also will discuss the agency issue which related to the wealth maximization goal, right? And then after that, we will be able to also to explain the rules and relationship of the financial institution and also the financial markets. Okay, what are the roles of the financial institutions? For example, the commercial banks, right? The finance companies. And what are the roles of the financial market? For example, the stock exchange. Okay, what are their rules and how are they going to operate within the economic system? And then after that, we will also be able to differentiate between debt financing and also the equity financing, or debt capital or equity capital. Now, let's go to the next slide. Okay, the definition of finance. Okay, the definition of finance is very simple, very short, and it's very easy for you to memorize. Okay, basically the definition, as what we have mentioned before in my class, in my previous class, is all about managing money. It's actually the art and science of managing money. So everything deals with money. Everything deals with how you want to control the money, how you want to manage money, how you want to use the money is considered under finance. So it's very short, very clear, very easy to remember. Okay, now let's see what are the opportunities in finance. Okay, maybe some of you are not finance major, right? You are not finance major, right? So it might be come to your mind that this is the rules and opportunities for the finance major. What about me who are taking human resource? What about me who are taking entrepreneur? What about me who are taking marketing? So basically, even though you are not taking finance major, actually finance is actually, you have to know about finance because you have to communicate with the finance department or the financial manager when you are in the working industry. Even though you are in marketing, even though you are in human resource, you have to communicate with them, right? So basically, if you want to prepare a budget, like for example, you are a marketing manager, and you want to prepare a budget for your advertisement this year. So what you do, you have to really know what is the company's cash flow, right? So what is the budget being provided to the marketing department? So if the budget is very big, you can afford to advertise through television. But if the budget is so small, you can only afford to advertise through newspapers or maybe through only radio. So it is really important for you to know what are the jobs of the financial manager, and also to be able to communicate with them. Because after you have only know what is their job and responsibilities, you can be able to communicate with them very easily. Right? So now I will explain to you some of the opportunities in finance which are in the two major areas. One is the financial service, the other one is financial management. Okay? In the financial service, it is very common is that many of the finance graduates work in the banking industries, work in the investment sectors, work in insurance sectors, and also in pension fund, which is in the case of Malaysia is ETF. Right? So this is the financial services that you could always enter after you have graduated from Unit 10. Okay? So these are some of the examples of opportunities that you can grab after you have graduated. And also in the financial management area. So in this case, you might want to go to a normal company, not a banking industry, but a normal company. When you work in a normal company, a normal corporation, you can become the financial manager, and then your task is maybe you'll be doing budgeting, financial forecasting. For example, you want to forecast what is the sales in 5 years' time, right? Okay, and then you can also do an investment analysis, for example, brokerage firm. Okay, so you are doing investment analysis whereby you collect money from the public, then you will invest it into several stocks, right? You are maintaining a portfolio of investment, right? And also you can also become a credit administrator, okay, whereby you will evaluate the credit worthiness of the borrowers, okay, when you are working in the company. Because sometimes when you want to sell a product, you have to sell it using credit terms, okay, but you have to evaluate whether the debtors will be able to pay back the amount due to you. Now, and another thing is the treasury department. Okay, treasurer, the function is more like more toward external parties, whereby you will be dealing with foreign exchange market and also others. Okay, I will discuss about treasury more further detail after this. Now, we can further divide the finance into two levels. One is the macro level, the other one is the micro level. So in the macro level, it is actually, you are seeing it from the bird's eye view. You know what bird's eye view? The bird's eye view means that you are a bird and you can look everything down when you fly, right? So the bird's eye view, you can see everything as a whole. Or maybe in a simpler word, you are seeing from the helicopter view. So you are in a helicopter, you can see everything down there. So when you are in the helicopter, you can see everything down below you. Okay? So you are seeing it as a whole. Okay? Now, it is the same as macro. Okay? Macro. Macro is actually, the definition is that is the study of financial institutions and financial markets, okay, and how they operate within the financial economic system, okay, both local and global economy. Right? So basically, it is actually, you are seeing it from the whole perspective, right? You are seeing from the FI and also from the financial market. So you are seeing it from above, okay, and then how they operate. So that is the macro level. However, in the micro level, it is more specific. The study is more specific to more specific things. For example, financial planning, okay, asset management, and fundraising for businesses and financial institutions. Right? It is basically more specific. How do you want to invest the money? How do you want to use the money? And how do you want to acquire the money? Right? Where do you want to acquire the money? And all that questions will arise. Okay? Who, where, what, when. Okay, right now, I'll go to the next slide. Okay, the next slide will be talking about the key activities of the financial managers. Right? Okay, now the key activities of the financial managers, I have already outlined that three major key activities, which are the financial analysis and planning. Right? The second one is investment decisions, and the third one, financing decisions. Okay, we have three major key activities, which are the financial analysis, planning, investment decision, and financing decisions. Well, if you compare it with the accountants, normally, what accountants here? Just raise your hand. Accountant. Not yet. Accountant to be? No one? Nobody? Very shy to raise your hand. Okay, you, only one. Okay, 2, 3, okay, 4, 5, a lot of accountants, 6, 7, okay, 7 accountants to be. Right now, if we are comparing it with the accountants normally do what? What do accountants normally do? Preparing accounts. Okay, prepare the accounts, maintain the accounts, and then you present the accounts to the board of directors, right? In terms of the financial statement, balance sheet, and also cash flows, right? Basically, even though it is just like the same as the finance manager, but the task of the finance manager normally will extract the information from the financial statement. Then they will do an analysis from the financial statement. Then they will make decision. Okay, so the accountant prepares, the financial manager will use it. Okay, there are different tasks, but in some cases, both functions are being done by either the accountants or either the financial managers. Okay, these are the key activities, right? Now, if you notice that, what is in the box that I presented on the slides? What is in the box? What is it? It is a balance sheet, right? So, accounting major, for sure you are already familiar with this balance sheet. So, in this balance sheet, we have the asset side and also the liabilities and equity side, right? So, in assets, we have current assets, which comprises cash, account receivable, inventory. Inventory is the other name for beginning and ending stocks. Okay, it's the other name for stocks, right? Stocks. This is as term, right? And then we have the total current assets. Then we have fixed assets, which consist of land, machineries, office equipment, and many other things, right? Which is tangible and hard to dispose to cash as soon as possible. So these things are called fixed assets, right? And then we add the current asset plus the fixed asset, we will get the total assets. Okay. Now, as I have mentioned before, this side will give you the total assets. Okay, do you remember the accounting equation? What is the accounting equation? Yes, asset equal to liabilities plus owner's equity. So we have to balance the total asset with the total liabilities and equity. So under liabilities, we will have current liabilities, which are the account payable. What is account payable? Account payable is the name for creditors. Okay, creditors who sell you on credit. You are buying from them on credit. And then account payable, this is different term of different from the account payable, because this account payable normally deal with the trade payable, but notes payable doesn't necessarily is a trade payable. Okay, it might come from other sources. And then we have the total up to the current liabilities. Okay, then we have the long-term liabilities. Okay, in long-term liabilities, normally it is a term loan. For example, if you want to buy a building or factory, you cannot pay cash, but you acquire loan from the bank to buy the building. So the loan is called long-term loan because you are paying it, for example, for 23 years or 20 years. So it is a long-term loan. So we fall under long-term liabilities. Okay, and then we have the equity part here. Okay, in the equity part we will have the common stock, the paid-up capital, and also the return earning. Okay, common stock. What is common stock? Ordinary shares, right? It is not the stock like this stock. It is different. This is shares. The shares. Now, return earning is the accumulated profit. Okay, then we total up total equity and total liabilities. We will get total liabilities and equity, which must tally with total assets. Okay, this is the sample balance sheet. This is a refreshment for you. Okay, now from this balance sheet, the financial manager can analyze the information and then make decision whether to make investment decision. This is investment decisions, and whether to make the financing decision. Right, from this information. Normally this information is being provided by the accountant. Okay, now the financial manager also have to look at the working capital of the company. So mostly working capital will be derived from total current asset and also total current liabilities. You will get a net working capital if you deduct current liabilities from the total current assets. Okay, this is what we call analysis and planning, which will be done by the financial managers. Okay, now we'll go to the next slide. This one is a simpler balance sheet, right? It shows you the portion of the current assets, fixed assets, current liabilities, and also long-term fund, but we excluded the equity part, right? But actually, you can include the equity part under long-term fund. Okay, then you have to perform financial analysis and planning with this information, right? So the asset side is actually for making investment decisions. Whether you want to buy assets, whether you want to buy new inventory, whether you want to buy new machines, whether you want to buy new cars or lorries. So this is called investment decision. And the other side is making financing decision. Whether you want to acquire funds from the shareholders by issuing new shares, or whether you want to borrow from banks, or whether you want to issue bonds. Okay, this side is making financing decision. Okay, now let's go to the next slide. Okay, this slide is showing you the organization chart of the corporation. Okay, basically the owner of the corporation is the stockholders. Okay, the stockholders are actually the owner of the corporation, not the board of directors, not the president, not the financial managers. Okay, now the owners or the stockholders will elect the board of directors. Okay, the board of directors might consist of maybe 10 people, maybe 5 people, maybe 3, depending on the needs and requirement of the company. And it also might be elected from external parties, might be from other companies or other industries. Okay, the board of directors. Now, after that, the board of directors will hire all the employees here. Okay, but normally the board of directors will not hire them themselves. What they do is that they will hire the president, and then the president or the CEO, Chief Executive Officer, will set up a human resource department. Okay, the human resource department will then hire all the other staff. Okay, but in this case we are not showing the human resource department here, and also we are not showing any other department. But basically there are three departments here, which are the manufacturing, finance, and also marketing. What I want you to focus that is in the finance structure. Okay, under the finance structure, we have vice president of finance, which is called CFO, which is stand for Chief Financial Officer. Okay, under this CFO, we will have two departments, which are the treasurer and also the controller. Right? The controller is basically being populated by the accountants. The controller is more internal. Okay, the activities are more internal, and there are basically more accountants in this department. And you see that all of these are basically dealing with within the corporation itself. If you look at the treasurer, then all the functions here are more towards external parties. Okay? For example, foreign exchange manager, pension fund, credit manager, cash manager, capital expenditure, financial planning, and fundraising manager. It's all involved with external parties. For example, if you want to acquire funds, you have to see the bank. Okay, the bank is not within the corporation; it is an external parties. If you want to issue shares, it is the public is not within the corporation. There are external parties. So this actually the treasurer deals almost with the external parties, whereas the controller deals within the corporation, and mostly accountants will be here. Okay. Now let's go to the next slide. What is the relationship of finance to accounting? Is it really related? Yes or no? Yes, it is related. So it is like brothers and sisters. Correct or not? Correct? Yeah. Okay. Alright. Now, actually, I will show you a diagram here. This is finance. Okay. This is economy. This is accounting. Okay. Actually, they are interrelated. Okay. Economy, accounting, and finance. As you can see, some of the functions are also overlapping. Okay. Some of the functions are also overlapping, which means that sometimes finance can do what the accountants do, and sometimes finance can do what the economists do.